Well, it's time now for business news, and Will Hildebrandt is with us in studio. Good morning, Will.
Hi, Eve.
Will, you're telling me you're going to start with one of the most dramatic moves in the currency market for decades.
That's right. This is the Swiss franc, and since 2011, it had been pegged to the euro and been trading at 1.2 euros. But on Thursday, Switzerland's central bank lifted a cap on the Swiss franc, sending the currency soaring up nearly 30% higher against the euro. Belle Lipton explains.
A change of direction by its central bank, and Switzerland's currency has taken flight. In a shock U-turn, the Swiss National Bank announced the end of its 3-year bid to artificially hold down the franc's value. Introduced at the height of the Eurozone crisis, the SNB's cap of 1.2 francs to the euro helped prevent deflation and recession. The SNB's chairman denied this was a panic reaction.
The euro distinctly lost value against the US dollar, which is why the Swiss franc also lost value against the US dollar. In light of this, the Swiss National Bank decided that it doesn't make sense to carry on with a policy that's not sustainable.
In towns across the country, people queued to change money, wondering whether in the long term they'll be winners or losers.
Personally, I live on the border, so the impact is quite positive. As long as you earn in Swiss francs, it's a good thing.
It may be positive for some of us, but negative for some big companies, for example Nestlé, which carries out a lot of its sales in foreign currencies.
Exporters are likely to suffer the most, with the head of watchmaker Swatch calling the move a tsunami for the Swiss economy. With 40% of Swiss exports going to Eurozone countries, there's fear jobs are at risk if the rest of Europe stops buying Swiss products.
Well, some surprising news there in Switzerland, and public opinion somewhat divided, Will. How did the markets react?
Switzerland doesn't like it, that's to be sure. A stronger Swiss franc is hurting many Swiss businesses. Zurich opened up just moments ago. Its stocks were trading down 3%. UBS and Credit Suisse are each trading down more than 2.5%. The FTSE, CAC 40, the Frankfurt DAX, all down about 0.5%. Markets still reacting to the surprise move from the Switzerland Central Bank. Now, it also led to steep losses in Asia. The Japanese yen climbed on the move. The Nikkei slid more than 2% because of that. All indices in the red closing there, except for the Shanghai Composite, which had a strong session thanks to its financial sector. It finished up 1.2%.
Okay, a lot of red there. Meanwhile, the head of the International Monetary Fund is looking pretty glum about the overall global economic outlook.
That's right. Christine Lagarde had said that there were some encouraging signs, but they might not be strong enough to help out the global economy. A drop in oil prices gives a boost to consumers' purchasing power and increases private demand in oil importing countries. But the IMF chief said the U.S. recovery and falling oil prices are not strong enough to overshadow long-standing concerns.
Good morning. The oil price and the U.S. growth are not a cure to deep-seated weaknesses elsewhere. Too many countries are weighed down by at least two factors, legacies of the financial crisis: high debt, high unemployment. Too many companies and households keep cutting back on investment and consumption today because they are concerned about the growth tomorrow.
Well, time now for a brief look at other business headlines. That drop in oil prices had led Schlumberger, the world's biggest oil field services company, to cut 9,000 jobs. That's equivalent to 7.1% of its workforce. Recent profits have fallen sharply due to the glut in oil production amid slow demand. Schlumberger said it anticipates a drop in spending for new oil and gas exploration this year. And a U.S. judge has ruled BP faces a fine of up to 11 billion euros. That's the bad news, but the good news is it's several billion fewer than what could have been. The judge made the decision on the grounds that the 2010 oil spill in the Gulf of Mexico was smaller than originally feared. And Euro Disney said its first quarter sales were up 12% to 341 million euros. Its park, Disneyland Paris, was Europe's premier tourist attraction in 2014 with more than 14 million visitors. Much of the success thanks to its new Ratatouille attraction. After the French, the British were the most frequent visitors last year.
Say I'm not surprised. Right, Will, to a very different story now. We're going to cross to China, where I believe one restaurant has caused quite an uproar.
That's right. 50 beautiful people, 50 beautiful diners, I should say, are eating for free at this restaurant. This article comes from Britain's Telegraph. The Korean restaurant Jeju Island in the heart of Jeonju is using face scanners to determine a diner's attractiveness. A team of plastic surgeons then judges the results. Naturally, this has caused an uproar across the internet, some people going to Twitter to say it's shameful. But local media have reported that security guards and demolition workers were since sent to the restaurant to take down the sign promoting the offer. But I don't know if I would be allowed to eat free there, so I'm not going.
But would we? Myself and Florence Villeneuve is also with us in studio for a press review. Well, very nice. I'll settle for that. Thanks, William Hildebrand there with the business news.